If you don't want to sell insurance or you can't sell insurance, you're probably not alone. And most people say it's very hard and it's not possible. And that's not true. So in today's episode of the Mortgage Business Mastery podcast, we're going to be talking about 6 reasons brokers don't sell insurance and how it's quietly costing you, hopefully not you, thousands of pounds. That is what we're going to be talking about today. Now, most brokers say they don't have time to sell insurance, okay? But the real reason is it runs much deeper than that. And there are 6 of those. So let's unpack them right now. So the first one is you don't believe in the product. If you don't truly believe that protection matters, it will always feel like an upsell. Real conviction changes your tone and it also changes the client response. Now, this, I think, is the number one thing. If you are not believing in insurance because you yourself don't have any, you don't have those products, that's a massive telltale sign straight away. If you don't believe in it, then why on earth are you going to sell it? Because at that point, by the way, you are actually trying to sell something and push something onto somebody you don't actually agree with yourself. Now, I actually would think that the advisors who do that are even probably worse than the advisors who don't sell it at all. Because I think that's kind of disingenuous. At that point, you are genuinely just trying to sell insurance for money, which I don't think is a good idea. Now, the way I would describe this is it's framing yourself as to what your job is. So your job is to eliminate risk. This is something I talk about quite a lot in this, is our job is to eliminate risk. Eliminate all financial risk to the client. That is the job as an advisor. And your job is to hopefully eliminate all financial risk, or if it is not possible to do that, then we reduce as much of that risk as possible. We never want our clients to leave accepting that risk unless that is completely 100% of their own desire. Obviously not going to force it on them, but this is a really important thing. Now, if you yourself don't believe in the product, you straight away, you're off to a loser. And I really, only thing I can say to you with this one is just get on board, or maybe do a different job, because I think actually it's probably dangerous you advising clients on mortgages, getting them into significant debt, which is significant risk, and then letting them walk out without any protection. It's kind of crazy. So don't fall down that trap, or don't do it. If you really don't want to do this job and you don't want to send it on to somebody else, which I don't think you should. I think you should do it yourself, for both for income and also for the client's best for the client, then really I think you should rethink your career choice. And I'm sorry, but we're open straight into 3 minutes into the episode and I'm already hitting you with that. I do believe that's the case. Second thing is you're afraid of rejection. Selling insurance often means asking tough questions, but avoiding the no's keeps you from hearing the yeses. So rejection is a big one. We all are scared of rejection. Everybody gets scared of rejection from time to time. And I'm no different to that. Like I completely get that. However, and this is something I'm quite a big advocate of, is the only way you get better at it and get callous to it and used to it is by doing more of it. And so if you're constantly avoiding it because you're worried that someone's going to say no, then, like that's probably not the best way. You've got to overcome that. And yes, you do ask tough questions, but you preset that at the beginning. I say this within the Mortgage Business Mastery system, the method that we use with my clients. We address very early on, we're going to talk about it, but then we also address in the submission call when we actually talk about insurance and submit that and close them on that. We actually say, look, at the beginning of this is going to be an uncomfortable conversation, and I want you to be aware of that. And I really, I don't think any less of you for this, but we're going to have this conversation. This is a really important kind of back and forth that you're going to have with these clients. It's very important to get that across. If you don't, and you don't pre kind of set it as this is going to be uncomfortable, and then you're worried about it, it'll be written all over you. Also, by the way, the more people that say no, eventually more will say yes. You have to learn that way. It's just the only way to do it. So if rejection is your biggest stopper from it, just get over yourself. Again, I like to use this concept of your job, my job, if I was an advisor still, and your job as advisor is to eliminate risk for the client. And it's not about how you feel, it's about doing the right thing for them. And I think that is the right thing for them. And so I think if you frame it that way, there's a little bit more righteous kind of activity towards it, in my opinion. It definitely helps me anyway. Seems to help other people too. Number 3 is you leave it too late. So if protection only shows up at the end, it feels optional. If you want to bring it in early during your discovery call or fact find and make it part of the journey. This one is a big one that people do. I don't know why people do this. I said this when I was talking to someone recently. I said there are kind of 3 camps on this. First one, which I don't think happens as often as people would make out, but it does happen, is that you just do the mortgage. And if this is you, shame on you. I always have a shame button going shame, but shame on you in a nice way, But like, if it does happen, what this would be is that you just do the mortgage. You don't talk about it. And then just randomly somewhere during the process, you go, cool, now we'll do your insurances now. And it's like, what the hell are you talking about? Like, where did that come from? I didn't even know that was a thing. That's quite common. Well, no, it's not common, sorry. But it does, you hear that happens, but it does happen, but not as much as you think. There's one layer above that, which is just a little bit better, which is that you say at the beginning, look, we're going to, you just say like, my mortgage advisors and I also do insurance. And that's kind of it. So you make them aware that you do insurance. You might not say you're going to talk to them about it, but you will say, look, do insurance. I'm going to talk about it at some point, maybe, but we don't really talk about it much more than that. But then we have the third one, which is the most common one I see. And this is a lot of people do this. And if you do this, again, this is not shame on you on this one. If you do this one, you can improve, but you're already doing it. Most people do this, which is that they say, we're going to do the mortgage first. And then once we've got the mortgage all sorted and the offer done, we'll then look at your insurances. And we do this as if it's a good thing, like a pride. It's like, yes. And no, you don't do that at all. Like that, you do the insurance and the mortgage together. Always, because in the client's mind, they need to be cohesive. They're connected. There's no difference between the mortgage and the insurance in the client's mind. And the moment you break that is the moment you will start to lose that trust and lose the amount of premiums you get. It will go down. It will decrease. And you do not want that. Okay, I don't want that for you. You don't want that for you either. So really want to start looking at that is get it as early as you can. Now, how do we do it? And how do I do it with clients? Well, we bring them we introduce it, hopefully in content in some ways, just dropping little like breadcrumbs. And then what we do is we would then, in discovery call, we have a whole kind of 5-minute discussion all around it. But it's scripted completely, but it's very light touch at the same time. So it's not very heavy, very deep, but it does explain everything that's going to happen and when we would be talking about it, which is at the point of submission. And then at the point when we submit the mortgage, we have a submission call and we submit the mortgage and the insurance together at the same time. So they know it's all part of it. And we preset that, as I've said before, as this is going to be uncomfortable. And it's going to be an uncomfortable conversation, but we're going to have it. And at the end of this call, we are going to be leaving with an agreed amount for both things, or an agreed policy for both things. So that is a way of doing it. Don't leave it too late. If you leave it too late, honestly, it becomes an absolute mess. Now, number 4 is you don't know how to position it. So protection isn't about policies, it's about outcomes. So frame it around family income and lifestyle, not technical features. This one makes me smile. And the reason it makes me smile is because it is, I got caught out with this. I got into a bit of a tussle, I guess I would say, industry-wide, but not really. But like, I'll explain it now. And I've never spoken about this on any podcast. I spoke to the clients, but not publicly. So exclusive is I did an article. I write for Cover Magazine. I wrote an article about how you shouldn't sell gimmicks and lean on gimmicks as the reason people should take insurance. And the example I gave was using, for example, a smartwatch or a coffee. People don't buy insurances for those things, and advisors should not be selling and leaning on those as the main selling point. I didn't call the Vitality out or anything, not at all. But Vitality then kind of kicked off, had a bit of a moan at Cover, and also then did a rebuttal to me and called me out. Now, I think that was more telling on them because I didn't say them. I obviously was referencing the part of them, but I think their products are good. But I'm actually referencing everything. What I'm actually meaning is access to 24-hour GP or any of those things. And they're not bad things. They're good. But what they are is not why we're taking insurance. Why we're taking insurance is because we want to protect our family. We want to protect, like I said on the slide then, our family, our income, our lifestyle. That is what they do. Funnily enough, life insurance, the main thing about a life insurance is it pays out when you die. The main thing about critical illness cover is it pays out when you're critically ill. The main thing about income protection, probably getting the theme here, is it pays out if you can't work. Now, they don't go, oh, but guess what? The latest Apple 6 or Apple iWatch, whatever, 1,010,000. I don't have an Apple Watch. I do, actually, but it's in a boxer down there and I haven't used it for years. But those are the things that people are like, oh, I'll buy them. And that's the problem. We lean on that. Same with GP, out of hours GP. Why are we talking about out of hours GP? If I want out of hours GP, I'll go and get out of hours GP. You can probably access that. You can get PMI. That's more PMI led. So of course they're good features and they are good features and they should be spoken about. after the point of sale, more as like actually, just so you know, it does all of these things too. But if you sell the outcomes, well, that's what will sell it. Interestingly, we don't need to talk about insurance that much to get people to take the full solution, meaning 150 to 250, maybe even £350 premiums. You don't need to talk about what it all does. You just need to say what it does. It will protect you in the event of this. If you die, it will cover the mortgage. If you're that, it will do this. If you're critically ill, it will pay that. If you've got income protection, it will do this. If you die, this FIB policy will pay an income to your family until retirement age. These are the things that you need to speak about. You do not need to talk about, but don't worry, Best Doctors has got you covered. Like, again, these things are cool, but they are not the reason they're buying the policy. And if you think they are, you're losing, because they will just buy, they can buy that stuff themselves. So don't fall down that trap. Number 5 is you had a bad experience. Maybe you tried it before and it fell flat, but one bad sale does not mean that the next one is going to fail too. So you need to get support, get a structure, and try again. Big advocate of this one, probably very common with amongst many advisors, is that you are all, bright-eyed and dough-faced or doughy-eyed, whatever it is, bright-faced, doughy-eyed. I don't know what the actual terms are, but you're excited when you start off, and then you get knocked back. And when you get knocked back, and you then go, do you know what? It doesn't work. And this is common. You hear people talk about this like, oh, everybody's got medical problems. No, maybe just the first 10 people you spoke to had medical problems. That's just part of it. That's life. But guess what? You speak to 200 people, they're not all going to have medical problems. And if they do, guess what? Policies have factored those things in, and they're easy to underwrite. Things like Underwrite Me, so all that stuff is available for you to be able to do that. It's actually not that hard. Or guess what? You can pick up a phone, speak to an underwriter. It's not that difficult to do the job. Now, one bad experience shouldn't set you away from doing more. It should do the opposite. And that's what I said before. You want to get support. Now, there's many other coaches out there. Many of them I actually work and coach myself. I coach them. And so there are great people out there to help us nowadays, because I'm fully booked and it's like a big waiting list, and I'm very selective on my clients. So you don't have to wait for me to get help with insurance. You can go and work with anybody if you needed to. But get support. Get someone to help you, whether that's a mentor within your business, whatever it may be. But getting support is going to really help. Get structure, more importantly. You cannot wing your insurance process. You can't just think I'm going to talk to them and be nice. You're going to be banking on charisma then and hoping that client's going to do well. You need structures. The structures that I use myself, for example, it's meticulously organized, word for word, every single step of the way, to make sure the client understands the gravity of their situation, and that we've taken them emotionally through a journey to the point where it makes sense for them to take it. This is so important to do. And yet, many advisors just go, I kind of just figure it out. I'm good. I talk to people. I don't need it. No, you do. Especially if you're not hitting them every single time. You need to. That is very, very important. And then the big one, like it says on the here, is try again. Just keep going and going and going and going. And I love this quote. Anyone who's listened to my podcast long enough will know me. I know they say this a lot, is don't practice till you get it right. Practice till you can't get it wrong. Just keep going and going and going. And the more you do that, the better the outcome is going to be for you and the client. Number 6 is you think it slows down the deal. And the truth is with this, it can actually speed it up, but it actually gives you better outcomes. But clients are going to trust you more when you protect their best interests, and that builds long-term loyalty, which obviously is going to speed up business. So it might slow down the initial, but it'll speed up in the long term. So let's talk some numbers on this. This is a big common one again that people say, especially advisors who are busy and good. And so meaning they're doing 10, 15, 20 mortgages a month in some cases, so they are doing a lot. I've got some clients of mine that do like 35 mortgages a month, like a lot of mortgages. The common misconception could be, actually, I don't have enough time to do that. But actually what you should do, in my opinion, is take a step back and slow down that thing. You'd rather, in my honest opinion, you should do less mortgages and get better insurance. Why? Well, because insurance is the biggest income driver. And also, it's the right thing for the client. We go right back to the beginning of this episode. Our job is to eliminate risk wherever possible, reduce it if necessary, if that is the final option. But we never want our clients to walk away accepting the risk, because that means that they are at significant risk because they've taken on significant debt. It's not rocket science, pretty clear. And so, one, if we slow it down and learn how to protect them properly and eliminate that risk, guess what? You'll make a boatload more money. That's like just the first. Let's talk about, you make a boatload more money, because you're going to make a lot more money selling somebody a £250 a month or £150 a month premium policy than you are doing any number of mortgages. It's quite a significant jump, versus mortgages where you're just going to be stacking them high and just keep slamming it, and you will burn out Whereas, so that's one of them. The other reason, though, is you're going to do the right thing for the client, which is eliminate their risk and make sure that they're okay, which means you can sleep at night knowing those guys are good. If you're a broker and you're just kicking them off and just going, I've got mortgages, but they're not done insurances, genuinely, you are sending people off going, oh, okay, good luck. You've got to have a bit of a conscience about that, surely. I mean, you don't have to, but I would be like, God, I don't want to do that. So you've got to think about that. But from an income perspective, you absolutely may need to slow it down at the beginning. And one of kind of three things can happen. You can either, once you slow it down, you might realize that you make the same, if not more money, but you've got less clients, so less work, happy days. You may decide, do you know what, I'm going to bring somebody on to work under me, employed, self-employed, whatever they may be, and we can increase the capacity because now I can work with these, they can work with them, and then we're going to be able to make more money collectively. Or you might decide, you know what, I'm going to work really hard now because I've got even bigger opportunity, which is actually interesting. What I did with this, but different kind of story, was you go, okay, cool, I'm actually going to work a little bit later because I'm working 9 till 5 right now, but maybe I'll work 9 till 7. And if I work 9 till 7, then, or 8:30 till 7, and I'm going to be able to make 2-3 times what I make normally, because now if I'm doing 30 mortgages a month, I can now get 30 mortgages with insurance. That's a monstrous amount of money. Now, you don't have to do that. That's not the option for everybody. That is the option for some. All three of those options are absolutely great, and they're all available to you if you actually decide to sell insurance, which I think is probably one of the biggest ones that people massively misunderstand. So the takeaway for this episode is you don't need more leads, you need more confidence. You need to be more confident in your insurance, and if you are more confident in your insurance, you will do well. It really is that simple. Now, before we end the episode, I'd highly recommend you check out my 30-day mortgage broker boost. These are 30 emails with quick wins to grow your mortgage business. You can sign up to that. They're completely free. Check out the link in the description.